stand on principle, or we will not stand at all.
Hi everyone, this is Thierry Arys Ruiz here for another episode of Principal Discord. This time we are joined by Mike McGlone, senior strategist covering commodities and other things at Bloomberg. Hi Mike.
Hello Thierry.
So Mike is going to be with us at the monetaryreset.net event, where we will be participating with private sector, academia, some international organizations such as central banks and the IMF. Mike, you will be looking, broadly speaking, at CBDCs and the number of implications. But before we got into it, can you tell us a little bit more about how you discover Bitcoin and how you consider it within the framework of monetary policy, central banking, and maybe as money?
Well, I first discovered it probably about 2011 or 12. My eldest son was studying about it and started mining a few and really not gotten too involved, but we started discussing it at Bloomberg. I've been Bloomberg since 2016. I really started covering it here 2017, part of that big run and up and run back down. And I think I'm one of those classics, no zealot like a convert. I was initially quite skeptical about this quote unquote internet money, and now I've come around to believe that Bitcoin could be the most solid form of store value, not really money the way I look at it ever. So I publish on Bitcoin. I publish my outlook on Bitcoin and cryptos, and I really differentiate the two. I see Bitcoin as basically a store of value like gold, and I see most other cryptocurrencies is very highly speculative, and some will win, some will lose. And I view the next most significant thing will be the trend that has been key, important is the macro supporting Bitcoin, and then everything else is Tether is taking over. Tether should be the number 2 Bitcoin within a year or two based on just following the trends.
Right. So you touched on a thing which is CBDCs, essentially central bank digital currencies, and whether or not this will be issued by central banks or by private entities, right? I see that with the new framework of central banking activity, since the 2008, 2009 and quantitative easing, all sorts of unorthodox policies, it seems to me that Bitcoin was kind of a free market solution that came in order to give another alternative to fiat, right? As far as I'm concerned, I think that it's just another one of those fiats, since it's not backed by anything either way. But you see Tether, for example, which is just a fiat currency, but issued somewhat by private entities. So how do you differentiate the private central bank as the Fed, which is also a private entity, and Tether on the other side that clearly makes the case for another way of transacting fiat?
I look at Tether and stablecoins. The rapid increasing market capitalization is indicative of the market's adoption of what they want in this space. The market wants digital currencies to transact in, and it's an indication to central banks that it's just going to be a matter of time that they pick it up and do it properly and launch digital currencies. And to me, I view this is just the market saying what it wants. But I really like to differentiate that the world uses the dollar as a reserve currency. It needs a decent money, and the dollar is a great form of money. You want to spend it. You want to spend any currency. You don't want to just hold it too long because you don't get anything for it anymore, and it deflates away. But it's great for spending. But then there's the opposite of that, like things like gold and Bitcoin. You don't want to spend it. It's not easy to spend, but you want to hold that to store that value because you don't get interest rates anymore.
Right.
We don't really anymore. So that's where I really like to differentiate. But I view Tether as just watching those trends in market capitalization. This is what the market wants. It's just a matter of time that we're not going to use paper anymore. And I kind of feel sorry for, how are we going to pay tips and things to, I guess it can all go electronic. But that's the thing I have a problem when I travel. I always like, it's an American thing to give tips. But I don't carry really paper money anymore, and coins are so. But that's where it's going.
It's another thing with Warren Buffett saying that gold doesn't produce interest and it's just a rock. But when you look at things now and negative interest rates, comparatively, gold becomes a yielding asset. So it's really interesting that even cash, which is the most basic form of holding central bank liabilities, is actually sought off because of bonds and other ways of holding vast amounts are kind of like looked at in a different way now with the policy. The other thing you mentioned also is gold. Well, as you might be aware, I am a former commodity trader, and I am issuing a token backed by gold precisely because I thought that Bitcoin tried to provide a fiat alternative, and then I see the rise of Tether as the failure of providing this alternative to fiat. And I think that over the long term, you will see this going back to the gold standard, but maybe in a different way. Now, outside of that equation, there is, let's step back a little bit, right? The blockchain technology has been popularized as a decentralized technology. Does it really make sense for a central bank to use a decentralized technology, or do they really need blockchain for that, or should they just use Visa and Master?
Well, that's the problem I look at with Visa and MasterCard. In a world of zero and negative interest rates, someone getting 2 to 3% of every transaction is just obnoxious. It's unsustainable. And you know that's going to be replaced. I mean, obviously, we can Venmo and things and do in different types of formats, but I don't really know how they're going to do it. I leave that to the experts, but I just know it's a matter of time, like airplanes and cable TV. It's just a matter of time. Let them figure it out. They figured out how to do digital currencies, but I can't see how it's not going to happen. Like paper money started, what, 300-400 years ago. It's just a matter of time. It's a better way of transacting. And you mentioned millennials earlier. We all have our phones. Everybody likes to do everything on your phone. And I don't even need a credit card or a wallet anymore. Everything's on our phone. So should our money and our store value. And it's happening here a lot. There's companies that, like a recent one, I don't want to mention specifics, but where you can store your digital currency, transact, and earn interest. And millennials love it. I don't see how that's going to stop. I think it's
Yeah,
going to
that's
only
the
accelerate. And the
decentralized
decentralized
finance
finance. Yeah.
Trend. So this decentralized finance trend, in a way, I see it as a big experiment as well, because it's not regulated. Can be all of the wrongdoing from the 1980s to the 2000s that can be replicated again, and then migrate the old rules into the new ones, and it will take time. And then at the same time, you see decentralized finance maybe having a more free market approach into interest rates and where they should be. With the Taylor rule is not respected clearly. So given that, but let's go back to what you said. Like, so let's stay away from the retail side of money, and then maybe the more institutional side of money, where we see the institutional players. I used to trade with Trafigura, also traded somewhat with Litasco Lukoil. Are we politicizing money in two forms? The one is when you see embargoes with Iran, where you need to trade oil, and you cannot use the US dollar and some others, or when you're completely cut off of the Swiss system. That's one way of politicizing money. The other way of politicizing money is when you have vast amounts of debt, and you use the central bank to monetize that debt. So the question here is, are we or are we not in a separation of state and money, or do we have money increasingly being politicized, and so therefore there will be another type of currency war that will be more close to geopolitical war?
It is complete. You nailed it. It's completely a good example of human nature and history, that if you can, you will. And the U.S. certainly is. And I'm not going to give any kind of bias, but if you can weaponize something for the vested interest of your government, and the difference there is, one of the unique examples in history is the U.S. is the policeman to the world. And I always like to say, well, who would you rather have the police person? I mean, people in France speak French. People in Germany speak German. They have independence in Japan. Yet they were conquered by the U.S. So, okay, that worked out okay. So what's to prevent this? But I think the countries that are the main adversaries, obviously we mentioned Iran, we have China, and we have Russia, who don't like it, are going to seek alternatives. But right now, it's just when the 80% of the world's transactions are done in dollars, and the U.S. has a vested interest for its, certainly of this administration, it's certainly going to use that. It's human nature. But the key thing you mentioned that I really like is the politicization. Is there is no end game to modern monetary theory and the ability for governments and politicians to provide stimulus and print money to get elected until it ends. There's just no end. And the only way it ends is with either debasement of currency in some form of currency debate. That's the only way it happens, a massive inflation. Because certainly in this country, if you don't provide that extra stimulus, you're not getting elected. It's just simple. And then we have the central bank doing it. So I look at it in a global, monetary, macro, historic, human nature basis. There's only one end game to this, and that is you need solid physical assets. You need to convert that paper money that we use to pay our taxes into something that land, real estate. No, it's less so. Can't really use bonds anymore. I don't get anything. Equities and things like gold and Bitcoin. It's just, to me, and when we have this conversation, hopefully, if I'm around 10 years from now, we're going to say, oh, it made a lot of sense.
What I make of what you just said is that there is a divide between Wall Street and Main Street, where the incentive for Main Street is MMT, and let's use CBDCs to just helicopter money everybody, and then confirm that there is no real independence of central banks. And the US is not the only one. And the other thing that I'm taking away from this is that Wall Street, on the other hand, has a fiduciary duty, in a way, to, if not make money, at least not lose some. And so there's this divide of the haves and the have-nots. There's this polarization as well inside, from political reasons and in terms of wealth redistribution. And so this is kind of like a lot of powder and some classes in the making. But how do you mitigate, from an investor perspective, from a wealth manager perspective, for what's happening to money on the one side and what's happening to the risk reward parity as you are being pushed in the risk curve? Isn't that the perfect recipe for Bitcoin?
Yeah, exactly. It is. And that's how you remedy it. And the way I say, what you earn in that piece of paper that's being debased, it's your vested interest to put it into solid physical assets once you pay your taxes and pay your bills. Bitcoin is one of the ones, gold, real estate, income producing properties. And unfortunately, the key thing, it used to be the equity market, but that's not the case anymore. And I think that's transitioning now as we enter the end of Q3 in the US. And that is US debt to GDP is a high since the World War II, yet as a percentage of total GDP in this country, the S&P, the stock market capitalization, is the highest ever. So there's just not a lot of room left for equities. Yet we had a massive round of debt that pushed it up, and the U.S. has way outperformed the rest of the world. So how much further is that going to go? I think what's transitioning is people are going to realize, okay, I'm not going to make as much money in the equity market anymore, so I need to take those dollars and put it something else. So I expect what's going to happen is this kind of massive rally we had in equity prices in the U.S., not in the rest of the world. It wasn't so much that we had in the last 10 years going to transition to more physical stores of value like property, gold, and Bitcoin.
But the only inflation you see is the inflation in asset prices. You don't see CPI.
Right. Well, so that's the key thing. We're not getting that yet.
Okay. So all right. Independently from this, because I see Bitcoin as the millennials' gold, right? But when you look at the structure of it, it fails as a store of value because of the volatility. You wouldn't put your rent on Bitcoin. It fails as the medium of exchange because you cannot have that many transactions per second. And it fails as a unit of account because historically a unit of Bitcoin today is not really relevant to a unit of Bitcoin in 2009. So maybe the millennials have a point there, and then for any fiat currency that is based on confidence, it becomes a currency if you have trust in it, which there is a case to be made in Bitcoin. Why would you trust that more than another fiat currency? But for the investors, all right, who look at the long scheme of things, who look at history, who look at money overall in history, you see that Ray Dalio speaking about gold and things like that. I don't think Bitcoin fits an old school narrative for the institutional money, for the let's say meaningful asset manager, right? When you see the weak hands and the strong hands, and I don't see the strong hands betting heavily on Bitcoin, but rather betting on it as a portfolio diversification, but no more than that.
Not yet, but it's coming. That's one of the best things you and I think, in proper discourse and conversations, can disagree a little bit. So I disagree on the store value because let's look at what happened this year in Bitcoin. It dropped about 40%. Yet the world's and it's only been around 10 years, but it never stopped trading. It never went limit. You could transact Bitcoin at any time. Now, yes, it was volatile, but man, it's only been around 10 years. It's only at the moment only $200 billion. Yet you have the world's most significant commodity, crude oil, that doubled it in volatility. It went from up 60% to down negative 40, and then came back. And what that was an environment that we had the worst correction in the stock market since the Great Depression. To me, I look at what Bitcoin did this year. I was shocked at how well it did perform. I expected it to go down and stay down. But again, let's look at it 10 years from now. Again, it's only 200 billion. That's the average size of a stock in this country. And what's happening, I see, is it's not money. It's a store of value. Like, I think when people buy Bitcoin, you should consider never selling it unless it gets expensive and you need to use it to buy like a home or pay for a wedding or something. So that's the way I see it. But the key thing is to differentiate Thierry, I think, is adoption. The market has adopted it. That's what matters. Everything else in the space, even Ethereum, is a wannabe. In Bitcoin, it has futures. It has the robust backing behind it. The hash rate is just made all-time new highs, is increasing rapidly. Addresses used is increasing. GBTC, the top exchange-traded product, is now almost 450 million Bitcoin equivalents. So that's my point. Is as a strategist, I look at it. Something's got to change. All these trends I see towards more adoption has to shift downwards, or I look at it as price has to go higher.
Okay, so let's challenge you a little bit on that. But I look at, in the words of Peter Schiff, he says, it's never the first car, the best car. It's never the first invention of anything that's the best of that, right? It's never the first computer, the best computer. But that doesn't mean that cars are useless. That doesn't mean computers are useless. But it's probably not going to be Bitcoin. And maybe Bitcoin will become a collectible, like an old Nintendo or other sorts of collectible that you would trade on OTC markets for that reason. Where do you see the monetary CBDC situation in 5 years from now?
Well, I appreciate you mentioning Peter Schiff because he's a neighbor. We know each other in Weston, Connecticut. I think he's moved. But I see it only going one way. Just and I like to ask people the question: do you expect rapidly advancing technology and digitization to reverse or accelerate? We all know the answer to that. It doesn't flatline unless there's a war. We can't predict acceleration. I mean, we're both doing this video conference on our phones at the moment. In the past, we needed a mainframe or whatever and better internet connection. But it's just a done deal. It's a matter of time. And the key thing I like to point out is, what are the indications of that? Stablecoins. They're just, if you look at market capitalization, they are most rapidly increasing. So it's just a matter of time to me. And then the key thing I like to use, the term as you use, a collectible. I've described Bitcoin as a collectible, and I view it that way. But as a strategist, I've never seen this before. I mean, I look at gold as going to be a great way to bring on more supply of gold, and that's increase the price. You can't do that with Bitcoin. So that means the price has to appreciate, and the more it appreciates, the more it becomes the mainstream, because then the bigger institutions can get into it. And that's been happening here, as you've heard, like in the United States. MicroStrategy is getting involved. The large institutions are figuring that out. And I agree with Peter says about sometimes the first movers in the mess, but as a strategist, it's my job to find out anything that's getting close to that. And there's only one, Tether, at the moment, in terms of rapid increase in market capitalization that's absolutely near adoption, anywhere near the point of Bitcoin. Only one, and that's Tether. And I've been pointing that. I pointed out the first time in 2018 when I was in Hong Kong, and they didn't like that. But here's a fact.
I'll take my hat of the commodity trader who dislikes US dollars for many reasons. And one of the things I foresee for Tether, extremely dangerous, the IRA, okay, and the Treasury, the partner's Treasury. You are dealing with the minute you touch a US dollar, because it's a legal tender. I do gold because it's not a legal tender. The minute you touch a US dollar, that is the open door for the crackdown, for the SEC, for the IRS, for any sorts of branches of the US government.
It is, and that's where you have the independence of gold and Bitcoin. Now, what else has the depth? And I don't like the US dollar. I just like to point out the facts of the US dollar as far as its strength. The US stock market's been outperforming the world, and US bond yields, and the US bond market's still the deepest in the world, still relatively the highest yields. Until then, it's just, I think all the paper currencies are going down in value, and gold and things are going up in value. They're just going down together.
Right. It's not really gold that's taking any value. It's just that the fiat money is completely crashing, right?
It's the gold's the stability, store of value. Exactly. exactly. Like in the U.S., it's like it's a man's suit or a home. What can you buy in an ounce of gold? It's stable over time.
Now, principled question. There is the free market capitalism that since the 1980s has been so-called the winner of the Cold War. But yet, are we today in a free market capitalist system where when the main interest rate or the main price, which is the price of money, is not led by the market because the long bond is also now being manipulated, which the artificially low interest rates means what it means. It's artificial. You see the prices of assets where you have central banks actively involved in buying assets. Uh, is that a free market capitalist system?
So I like the analogy. I think free market capitalism, part of the reason we have massive deflation in certain things, like it's free market capitalism that really produced massive fracking. And that's what crude oil used to be $145 a barrel. You traded oil. Now we can get crude oil. I get free market capitalism. I get energy from my solar panels. I drive an electric car. Free market capitalism helped accelerate technology suppressing inflation. And I think central banks are doing exactly what they have to in a deflationary environment. They're basically printing money, but they know, and we know, they can create inflation anytime they want. One key way is, well, remember in the U.S. recently, they wrote checks to every citizen in the U.S. for, I mean, okay, maybe it's repressing, but if you want inflation, just add a couple zeros until you get it. In the U.S., okay, we have long bonds right now. One yield is like 140 or so. In the past, just get that down to 1 or maybe 0%. We'll eventually get inflation because it's just usually the way it happens. You need to press rates well below I think the inflation rate, like we pushed them higher. So I look at it as it's just responding to, let's put it this way, if we all were on a system like the Soviet Union was, I don't think we'd have this massive deflation in prices because they don't have the innovation and the discourse to create new products to disrupt technology and pressure down prices. And like, who created an iPhone? That was a bit of capitalism. I created the iPhone that I'm using to speak to you with right now.
How far can you go? How far can you go in MMTs and helicopter money before the money becomes irrelevant?
That's the key question. We're going to find out. That's the key thing. We're going to find out, hopefully in my lifetime, and I hope to live a long time, but it's just going to happen. And so here's the trigger points I'm looking for. The number, I'd like to say that we'll have a peak in the price of gold when we're getting near the nadir, near the bottom of the next equity bear market. Now, I don't know when that's going to happen, but it always has. Unless it's different time, we will get a bear market in the equities. Once that happens, we'll get negative rates in the U.S. Again, we have to find this period of long-term underperformance when the stock market stops going up and everybody in their 401k in the world, in this country, looks for someplace alternative. That's going to happen. We'll get more MMT. It's just going to happen until it reaches its apex. And I don't know what that's going to be, but it's going to happen. It's just, I don't see what's going to take to stop it.
Well, we live in interesting times, and I give you that, and hopefully we'll see more of that. To wrap it up, what is your controversial view that you have at the moment, or the message that you'd like to give to the audience?
Yeah, the bottom line is it's controversial but very logical. I don't want to repeat it, but it's true that my controversial view is what's happened in the equity market in the last 10 years is going to happen in solid physical stores of value like gold, Bitcoin, and property in the next 10 years. I think that's what's going to happen as we transition from one asset class that got very expensive to one that's relatively better value, and that one that's relatively better value swings back to getting expensive. To me, that's what's going to happen. It's a question of time.
So we're now creating a new asset class, and that asset class will enter portfolios. And then when that happens, then the asset class might look like a boom and bust cycle on its own, like in the technology space in the 2000s and so on. Is that correct?
Well, I just view Bitcoin in the bucket with gold and property and real estate in this country. It's just a little more millennials, and millennials are not going to be millennials forever. They're going to get older and move on, and that's what's going to be the next thing. They'll make money, and that's just how. I mean, I remember I was about the age of a millennial when the internet first came out, and I thought this was great. What do we do now? Look where we're using it. We use it for everything.
Absolutely.
I view it in that bucket.
Well, and the 10 top market caps are internet stocks. So so are we going to see that in 10 years? Blockchain stuff on the top 10?
I don't know about the blockchain stuff, but I do think the store of value assets like Bitcoin and gold are going to continue to appreciate. The technology is more I'll leave for you. I follow it, but for me as a commodity strategist, it's what's going to take for that price to go up or down, and I think price is going up in terms of how they're denominated, and that's right now dollars.
All right, Mike. So looking forward to hear you and ask the tough questions in the monetaryreset.net. And join us, like, share if you like this podcast. Like, share, subscribe, and follow us. Follow also Mike. And I'm looking forward to see you all. And for the next time, see you soon.
We will stand on principle, or we will not stand at all.